So this is buying climax and plus overbought, right? This one, it returns back to the trading channel, as you know. This is what AR, right? This is what secondary test. Okay. After secondary test, this is what? Can you tell me? FTI. Am I right?
Yep, correct.
Okay. FTI. And now the price goes up here. Okay. After falling through ice, the price goes up here. And we have this reference point, number one. Okay. Number two reference point is this one. And here the price fails, and the price fails, came back down, and then it came back here again. This is third reference point. And our bias is what? Our bias is distribution, right? So what do we have here? This at this third reference point, effort versus no result. So we can go short. Can we go short or not?
Yep.
Stop loss here at this high, and SL would take profit right over here. And you see we have more than 2 hour achieved, 2.15 hours. Okay. And now if we again, where do we observe our first lower high? Our first lower high was observed from here, this one and this one. Okay. And if you draw this channel, extend it. Is this oversold? There is no kind of sudden acceleration, but is this oversold? Yes. And it reversed back again, right?
Yeah.
Right. And now our reference point was this, just right over here at this point. Okay. So our first reference point is this one. Okay. Our second reference point is this one here. Okay. Our second reference point. Our third reference point, this one. We have a line here, higher low. After this, the higher low was observed right over here. Okay. Got it? This is our first higher low. After this all, a huge one, right? First higher low, price went up. And then what do we notice here? Can you tell me? Effort, a slight effort versus no result. And spring, right? This is spring. And now we can go up to this point. Do you understand?
Yes. Okay.
Okay. And now, because this was a major distribution, as I told you, this was a major distribution, right? And now what do we see here? What do we notice here? At this point, if this is secondary test, this is upthrust. This is what? Upthrust after distribution. And this is test. Do you understand the reference points? No demand at reference point. No demand. Efforts, no result, and reference point. So this is at reference point. Reference point. If this is, you know, if I just draw this one here, this is overbought plus buying climax, right? This is AR, right? This is secondary test, okay? And this is what? Does it make sense? This is FTI, okay? And this one here, hidden spring, this is LPSY, last point of supply. And this one here again, this channel, this is a slight, but here we have a major distribution, okay? A very slight accumulation, but major distribution. Am I right?
Yeah.
Okay. So this is what? This is second FTI, FTI number 2, right? Again, this is what? Upthrust. So you can easily take the position right over here. This upthrust. And this is what? upthrust after distribution. Am I right? And here, what do you notice at this point? This point, this point, this is what? Test of UTED. Right? Now, do you understand the what do I mean by reference points?
Yes.
Okay.
Understood.
All right. Okay. Now, let's suppose this is a major high, very huge volume, efforts no result, the price went down. Okay. So we have a slight range. Our first range is this one, this reference point. Our second reference point would be this one. And you can see right at this reference point, when the price reaches this area, and if we observe like no supply, no demand, or sorry, what to say, efforts no result, these kind of condition. Okay, this is no demand. Am I right? No demand.
Yeah.
Okay, this is effort versus no result. Each of this, at each of this point, a short position can be taken. Got it? And now over this part, what do we see? Between this high and low, what do we see? High and low. At this high and low, if you draw the channel here, a short trade. Does it make sense?
Yes.
Okay.
Yeah.
Right. And at this part, we went up. Now, what happened here? If we draw the from where is the first higher low? A first higher low, lower high was observed after this high. This was the first higher low, right? If we just try to match these two, what do we observe here? Oversold. Am I right?
Yeah.
Oversold at this point. Oversold went up, and right at this reference point, what do we notice? No supply. Right? Now you can go up. Last low was here. Our take profit was here. Understand? Okay. And now, if we also identify this channel here, after this low, this was the first higher low, right? And if we draw a channel from here to here, as I told you before, okay, and here we see shortening of the thrust. Make sense?
Yeah.
Yeah. Okay. Now, right over here, you can see this again and again, over and over again. If you draw this, our first major low was here. Is this oversold? No, it's not oversold because there is no sudden increase in volume. Is this oversold? Yes, this is oversold. And now after oversold, this is the first major high, this one. It went down after oversold. It went down through this channel, right? So this channel, what happened? This is what? If this is oversold, this is what? AR. Am I right? And this is
Yes.
what? Secondary test. And secondary test comes over which point? Over this reference point. Can you see? This is the reference point. And what do we notice here? F versus no result. Can you go short now? Our
Yes.
stop loss would be this last high, this last high above this point. So this is our last high. We placed above this point. Stop loss. And where would be our take profit here? Because this is distribution, you can just go down as much as you want. But I just suggest you to go for only 1 to 2 hours. Okay. And this second test has what characteristics? Lower high. Right? So as I told you, when you have a lower high, you just got it. And now, if this is AR and this is what? Falling through ice. this AR. If you draw a line from AR, this is what? Falling through ice, right? Falling through ice, FTI. And you see, once the price came back here in just one shot, can we draw any channel here? No, we cannot draw. A channel cannot be drawn, right? It's a very simple thing, a very simple move to the upside. And right at the moving average here, what do we see here? F versus no result and a hidden upthrust, right? Now this is a position here, stop loss placed over here, and take profit again. You can make sense? Make sense?
Yeah.
Okay. Now here as well, what do we notice here? Now, is this a kind of distribution, or is this reaccumulation? How would you know? This is reaccumulation or distribution? This range. As I told you, you draw the previous structure. Okay. And what is this? Oversold. After oversold, this is what? Automatic reaction. Automatic rally, secondary test, higher low, and then jump across the creek. So we have a JAC here. So what is the bias? So
Bullish.
all this trading range cannot be distribution. It can only be what? Reaccumulation. Do you understand?
Yeah.
And as I told you, as we go up here, what do we notice here? The price is making what? Higher lows, higher lows. We call this as volatility contraction pattern, as I told you. Do you remember? VCP. Volatility contraction pattern, and it will go up ultimately. So you can draw many reference points here. The first one is here. This. After this, the first higher low was this one. This reference point, 1. And at this reference point, how many opportunity did we get? We got this opportunity, we got this opportunity, we got this opportunity. Right? Yeah. Got it?
Okay. Got it.
Okay. And now, if I have to draw this channel from here to here easily, because this is a reaccumulation pattern. If you go to the 5-minute chart, I can draw it much more accurately. See here now. Okay, you can see this is jump across the creek, right? The accumulation pattern. And now this one is very easy on the 5-minute chart, very easily identifiable. Can you see? Okay, and on the 5-minute chart, this is our first higher low, second higher low, right? First higher low, and then second low. If we draw this channel here, this is what? Oversold. And now we can go to the 3-minute time frame, and then we can take an entry. Got it? Exactly at this point. We have the entry right over here. So our first entry would be, because the price came here, returned back, closes below, and then reversed. So this is buying climax. So where is the entry? Our reference point. This is first reference point. Okay. And then after this is AR. Okay. So where do we have our first entry? This is our first reference point. Our second reference point is here, this one. Can you see? This one at this trend line, and you can see here, what do we notice here? No demand. Can you see a third entry here, right over here at this point? Can you see? Multiple entries. All of these entries are the sell trades. Understand?
Okay.
Yeah. And now we observe the first higher low from here, right? The first lower high. And if we draw from channel from here, this point to this point, and we extend it, sorry, this point, and we extend it. What do we observe here? No overbought, right? Do we observe overbought here?
No.
No, there is no sudden acceleration, right? Just a normal move down. And we are in what? We are in major distribution area. Am I right? According to the bias. So here we can say that this is actually falling through ice, FTI, right? Make sense? This
Yes.
entire move is falling through ice, FTI. And now this is what? Our entry number one. This is our entry. Alpha versus no result right on the reference point. Entry number two, this one here, alpha versus no result. Entry number three, alpha versus no result. Okay, got it? And now as we just broke this entry here, you can see here, this support here, minor support. And what do we see here? Entry number four, no demand. Here, entry number five, alpha versus no result. Here, no entry, this is no entry. This is entry, this entry, got it? Multiple entries, we got it. Okay, now here as well. Now, where do you think our reference point should be? If this is a channel here, there is clearly this is a reference point, right? Our first reference point. And what happens after this reference point? The price makes what? Another one. So if we just define this one here, let me show you. This is what? Buying climax, right? Just a quick review. Buying climax. Why buying climax? Because if we draw the channel from here to here, it will be oversold, overbought. Right? And if
Yeah,
we draw
right.
another channel from here to here, because this is another channel, we can draw another channel from here to here. This is much more refined channel. Okay, and now we can delete this channel, the previous one. This is much more refined one. Buying climax over and overbought. This is what the price came down to the channel. So this is automatic reaction, right? Automatic reaction. This is what, as I told you, secondary test. Secondary test has which quality? Lower high. So lower high. Okay, and this is what you can see, upthrust, UT, right? UT. And UT, you can take first trade, UT. And after UT, this is our first reference point. First reference point, but we did not have any kind of trade here. Here we have first reference point here, UT on this reference point. UT, test of reference point, this second one, you can see FOS no result and upthrust out of distribution, right? And the price came back here. After UT, the price came back right at this level, this AR level, this one here. AR level, this AR. What do we notice here? Spring on a very high volume. We can take a very short trade, but we have to exit on this high because our bias is what? Our bias is bearish. Distribution structure. Got it? And now we have upthrust here. After distribution, we can take a trade. Our entry would be this one. Stop loss here and take profit just right over here. You can extend it, and it will be a little bit longer trade. Got it?
Yep, got it.
Yeah. Make sense now? So
Yeah,
rather
I'll
than
practice it.
3.45, so 3.45 would take a lot of time to achieve. What you can do, you can exit your trade right over here at 2.55, just 2 hours. Make sense? And now, as I told you, now our first higher low was observed where? This is upthrust after distribution. This is our first higher low. We call it as first lower high, right? FLH, first lower high. And from first lower high, I told you we can draw the channel, combining this one and this one. And now, what do we notice as we come down here? This high, we notice something. First touch, second touch, third touch. Okay, this is what? Shortening of the thrust. right? SOT. So this is our first reference point here. Okay, so this entire SOT line, this is SOT line here. And you can also draw SOT line like this, but this cannot be drawn like this because it will be high or low. For SOT, for SOT, remember that the price should be going down. Got it? Then you can draw SOT line. If the price is going like this, now you cannot draw SOT like this. Your SOT needs to be drawn like this, covering lows. Got it? Now we cannot draw like this SOT line. Why? Because this low is higher than this low. It has to be lower. So this low, this lower low, this lower low, you got it? 3 SOT, 3 touches. And from
Yes,
this
sir.
point, I can tell you that we can draw this structural line, right? Because this is first, second, third, 3 SOT points. And after that, we can draw the small line here. This is what? Upthrust, spring, test of spring, and multiple. At spring, we got what? Alpha versus no result. We can go for long trade. Got it? Here, what we got? Alpha versus no result. Test of spring. Here, what we got? Alpha versus no result. Did you see? Multiple trades on these locations. And finally, what do we see here? This one here, jump across the creek. And as I told you, if this is jump across the creek, this is what? This is spring. Okay, this is our first location, our second test here. Test of spring. And after test of spring, what do we notice here? Okay, test of spring. Got it? And the price is going up. And here you can see this is a major low. This is another low. So this spring low is higher than this low, right? So we can draw a structure here. But the thing is, if you draw like this, it does not make any much difference because the price keeps on going up. So we will discard this structure. Understand?
Yep. Right.
Now, why do you think the price just came back here and then came down, driving like this? Any structure here? Now, if you extend this buying climax line, this whole, okay. Now, what I'm asking, why the price came here and then reversed? If you draw the structure from here to here, major low, this is low, this low, this is the first lower high, right? If you draw the structure from here to here, and if you go to the 5-minute chart time frame, it will be much more better. We can see. Where is it? Yeah, this one. Yeah. So this is for this one here. This is the first lower high, right? Because this is the first major low, this is low. If you draw this one and this one, and on a 5-minute time frame, if you draw the structure here, what do we notice here? This entire completion. What is this? Overbought plus buying climax. Okay. Automatic reaction. And what do we notice here? Secondary test. Secondary test has which one? Lower high, right? And now if we go to the 3-minute time frame, we can redefine our entries. See here. Okay. Lower high. And what do we see? At this, exactly at this channel point, we see this. This is a reference point, a reference line. And what do we see here? Tell me. Hello.
Effort versus no result.
F versus no result. Can you take an entry? Yes, we can take a short trade. This is distribution. Stop loss, where do you think the stop loss? Above this high, this was the last high, right? Above this high, the last structural high was this one. Am I right? So we place our stop loss right over this line, this above. This was our last high. So we place our stop loss slightly above this high, like this. Okay, and how about a take profit? I will just target 2R, 3R. You can just target 3R. But eventually the take profit would go to this level. But thing is, if you just drag this level too low, you gonna, like there are a lot of things like, and you see the time here, it's already like New York close. So very low volatility around here. So this whole time will be wasted. So isn't it better to just to take 2-hour trade rather than just, holding your trades for longer? What do you think?
Shorter time.
Sorry?
Shorter time would be better.
Yeah, short term, right? Okay. And now just try to identify. Okay. Okay. Tell me this one here. Can you identify? Can you draw the structure here? A first, this low. This is a first low here, right? Higher low.
Yeah.
If you draw
Right.
from here, this is low, right? This is low. The price goes low, makes a low. This is a second low, right? So it is first higher low. Draw this part here to here. Right? What do we observe here? Oversold. Slight one, right? Reversed. Go to 3-minute time frame and refine our entry. Got it? Here. Refine entry. And if you just, this is also shortening of the thrust, right? First touch, second touch, third touch. Shortening of thrust. And what do we notice here? The price breaks through this area, right? So this is selling climax, right? And oversold. This is what? AR, automatic reaction. Okay, automatic reaction. This one is what? Secondary test, right? This secondary test has a low, which one? Higher low, right? So we can draw a small one here, right over here. And what do we notice here? This one here, this point. I did this reference point. Effort versus no result. Am I right?
Yeah.
So at this effort versus no result, you can go for a long trade. 2 hour, just 2 hour, not go for that much higher trade. Okay, got it? And now this entire way, you see the price is going up here. Now we are not getting any trades. Now, if one asset does not have any trade, now this one, you cannot place your trade in the middle one. This effort no result does not have any value because it does not have any reference point. Reference point is this moving average and this one. Got it? Okay. Here the price goes up here. No reference point, no reference point, no reference point. How about this one here? What do we see? No. And this is a reference point. Do you understand? Just at the moving
Yeah.
average. And now we have no demand here,
This is
no supply,
no.
no supply, right? And now we can, you see, when there was no reference point, there was very small move up, But as the price came to the reference point with this no demand and these kind of sign of strength or weakness, what do we see? A huge move. Can you notice?
Yeah. Yeah.
Because this is the point where the smart money and the big traders will be active. Okay. And now let's go for GJ. Okay, 5 minute. So tomorrow I will teach you how to put everything together. First of all, structure, then bias, structure, okay, and then entry point. Got it?
Yeah. Okay.
Now here, you see here, what do we here have here? Where is the first, after this low, this was a second low, right? If we draw our point from here to here and join it, this is what? oversold. Am I right? And we can draw the line from here. Am I right? This is the first reference point. Now you see how many multiple location we have. We have this location, this location, this location. Got it? Now go to the 3-minute time frame and you will see it. Can you enter a trade here? Yes. No, we cannot enter a trade because there is no FOS, no result, nothing like this, right? How about this one here? The second one. Yes, no demand. How about this one? FO versus no result. Yes. Okay, and the price. How about this one? Yes, we can. No demand. Got it? We have this, this, and this. 3. Does it make sense now?
Yep.
Okay. All right. And as the price comes here, okay, the price makes a AR, and after AR, what do we see? Lower high and the price, but it's major accumulate. It's a major distribution, right? Sorry, accumulation area. Okay, but for a small term, it is what? Distribution. We can take this trade right over here because it's a lower high, right? At the lower high, we can draw another channel, another line, and we can mark it as a, this one is upthrust, right? This is another reference point, and we can go short. What do we notice here? At this upthrust right over here at this point, reference point. No demand, right? And the price will ultimately move towards the last low. This is last low. Got it? But you have to only target 2R. Got it? Make
Yep.
sense?
Understood.
Yeah. And now after this one, now this one is a major structure area. Okay. Right. Okay. Now what do you see here? The price is going up and up and up, right? And we have a major structure area. And as I told you here, this trading range is between what? High and low. So the bias is, can you tell me the bias between this and this? We have a, in the
Bullish.
background, we have a distribution. So the bias is bullish and we have a uptrend between this and this. So bullish. And what do we notice here? Volatility contraction pattern. So or this third touch here, this third point here, what do we notice here? F versus no result, right? From here, no demand followed by F versus no result. We can go short, long right over here at this reference point. And our next target area would be this one. Make sense? 2R.
Yep. Okay.
Okay. And now we have a jump across a creek. After jump across a creek, what do we notice here? If you want to draw an uptrend channel, this after this high, our first major low was this one here, right? Our first major low. If you draw this like this, structure here, okay. Now here you will see the price is moving very slowly, right? Because we are already at the New York close, so the price will move very slowly. Got it? But the thing is, if this is what oversold, and now finally this oversold will have a reaction to this side. Okay. And where is the first lower high? Can you tell me? This is automatic reaction. Okay. This is automatic reaction. This is overbought plus buying climax. Right? This is what? AR. Okay. And this is what here? Can you tell me? Secondary
ST.
test. ST has what? Lower high.
Lower high.
And as I told you before, whenever we have a lower high, we can draw another major line from here. Now we have 2 reference points. Our first reference point is this one here. Okay. Our second reference point is this one here for this distribution. And as you know, as the price comes to this point here, we have what? Effort versus no result. You can see the price comes down. Okay. And we have second reaction here. Again, what do we have here? No demand. The price comes down. See, after there's no demand, the price comes down. Did you see?
Yes.
Yeah. And now, as I told you, that again, after this reaction here, this is a lower high, because here we do not have any kind of channel. It's a straight move up. There is no lower high, no high, low, or lower high, right? But here we have a lower high, lower high. So this is first lower high. We can draw the channel like this, joining this two. And now, what do we have here? You see the acceleration here, sudden acceleration here, overbought, the price closed above. This is what? Oversold. Test of this one here. And now what do we have? We go to the 3-minute time frame. What do we have here? Effort was no result, and spring. Make sense? 2R. Got it? And how about this
Yeah.
one here? After this low, our first higher low was this one, right? So if we draw this one here and this, join these two, this one and this two, and if we draw the channel like this, what do we observe here? Overbought here, and after overbought, what do you see? Selling climax in secondary test. What do we see here? Effort versus no result on the secondary test. Can we go short now? Yes, we can, right at the reference point. Make sense?
Yep.
Yeah. And now on the high side here, okay, we have this one, spring. Okay, this one was a test of this one, right? Spring. What do we have again here? The price came back, resisted, test of spring, and then went up. You see how the price is reacting at each reference point?
Yep. I understand.
Yeah, got it. Now this is what? This is distribution, reaccumulation. Am I right? Reaccumulation structure. And now I told you this is what? Okay, we have this one, this one, this one, and then we have built up. I think I told you about built up. Did I told you about built up near the support?
Yeah. Got.
Right, built up here. This is built up, right? And I told you if there's a built up near support, then we expect the price to break to the upside. So yeah, make sense? Spring here.
Yes. Understand.
Effort was no result. So this is the structure here. You will see every time built up here. And if I see the built up, let me show you another built up. Yeah, here. See the built up, you see the built up here, right over here. Can you see the built up near resistance? And now we expect the price to break up. Okay. Let me show you another build up or build down. Common here. Yes, here. The structure here. If we have this structure here, let's suppose this is our structure, let's suppose. Okay, got it. And now we have a come down, right? After distribution, we have built up near distribution here. You see, we have built up here, and after built up, what do we notice of the built up? Upthrust of built up. Can you see? UT of built up. And then the price came down. Understand?
Yep. Okay.
Okay. And here as well, here, the price came down here. We have a support and resistance. We have built up right over here. You can see built up, build down, right? And build down is near which one? Support or resistance? The build down is right at the resistance, this AR value. Can you see? So we expect the price to go down. Okay. So do you understand everything? So we will continue tomorrow and I will give you some notes about this entry points and everything. Okay.
Yes. Thank you very much.
If you have any confusion, you can write down and we can discuss tomorrow. Okay.